Okay, so if you guys want the honest truth, it's time to prepare for a large rally in Tesla stock. Whether you love Tesla or hate Tesla, these are the facts. These are my opinions. I'm just gonna spill the beans. I think Tesla stock probably hits $300 per share by October. Call it the end of October. Now, why I say the end of October is because if the robo-taxi event goes well, and really by well, I mean if we get definitive guidance for the start of the robo-taxi network in 2025. That is what I mean by goes well. Tesla can show us, they can say the best things we want to hear, but if we don't get that guidance, that definitive, confident guidance, Tesla stock's going to sell off after the event. But we do have Tesla earnings that are expected around October 16th, give or take. It may come out October 23rd or so. It may be the 21st. Couple of days around there is when we're expecting Tesla's next earnings. And I think that's generally going to be more good than bad. We're seeing a record quarter, what looks like it's going to be a record quarter over in China for deliveries. And Tesla's energy business is just on fire. That is their Megapacks and, well, even their Powerwalls seem to be doing pretty well. And let's face it, as I said in the last video or two now, the only thing that matters for September and a rally for Tesla stock is this Friday's non-farm payrolls report, in which the markets are expecting the unemployment rate is going to fall to 4.2% from currently being at 4.3%. You're going to get the SOM rule, which untriggers. Technically, if you use the decimal point, the SOM rule did not fully trigger from the last non-farm payroll unemployment rate that we got. But I mean, if it falls, right, if the unemployment rate falls, then you're really going to untrigger that SOM rule. And markets are going to love that. And we're going to see a very strong September. And just consider Tesla stock was a $270 stock just back on July 11th. So not that long ago. As we are now closer to the robotaxi event, there's going to be some optimism around this. And if this Friday's BLS report comes in good, there's not going to be much to stop Tesla running here. Probably into the low 300s. Because again, let's be honest, there's a lot of reasons to own Tesla right now. If the consumer does get better, if we avoid a recession, if rates fall, that's directly going to have a lockstep improvement to Tesla's profitability. Now, I'll talk about this more in the future, but essentially, if Tesla's buying down the interest rate, the more the federal funds rate continues to come down, we're pricing in 3 25 basis point cuts by the end of this year. That's 75 basis points. That is going to have a improvement to Tesla's profitability. That is less interest rate that Tesla will need to buy down to keep demand flowing. Because let's be honest, if Tesla was doing nothing right now, Tesla's demand would be hurt a lot more than it is today. And that goes for all car makers, really. Like the auto sector in and of itself is in a recession. And for whether you're Ford, GM, Stellantis, nobody's selling vehicles without buying down the interest rate to some degree. And Tesla is no different there. They're buying down the interest rate. So really all automakers will be benefited when the Fed starts to cut rates. Now, Tesla clearly has FSD. They have other big projects they're working on like Optimus and energy, and Tesla's just a far different company than a Ford and a GM. Tesla's a tech company. Ford, GM, Stellantis, they're auto companies. So it's not even fair to really mention them in this video, but still, from the auto component, everyone's going to benefit from rates going lower, as long as we are not faced with a recession. Now, historically, when the Fed starts cutting rates, yes, there can be some volatility around the cut itself, for better or for worse. But 1 year later, the only times we've had negative returns for markets is when we actually went into a recession, 2001 and 2007. Now, if you look at the 2 years later, after the Fed starts cutting rates, it's just a blowout, okay? Markets are dramatically higher if there is no recession. 39.1% higher in 1984, 50.2% higher 2 years later in 1987, 20.1% higher in 89, and this was actually the lowest forward 2-year return. 95 was up almost 73%, 98 was up 40.4%, and then 2019 was up 52.8%. So, I mean, those are pretty good numbers. And although I think it's going to be a long time before we know if we're truly going to have a soft landing or not and actually avoid a recession, I do think if this Friday's non-farm payrolls report comes in better than expected, if the unemployment rate does actually fall like markets are expecting, Wall Street's going to jump to that soft landing conclusion a lot faster. And yes, I think that's a flawed kind of way to think about things, that one data point can be this important, but that's exactly how we're set up. And I think from that perspective, Tesla stock is going to have a lot of upside from here. Now, I've talked about this before, but as rates do fall, and inflation falls. One, if the federal funds rate is, let's say 10-year treasuries, because that's what people, judge their investments off of. That's what people peg to markets, 10-year treasury yields. Say they're trading at 4% right now, or they have been average at about 4% over the last couple of months. They're at about 3.8% right now, but for simple math's sake, say 4%. Well, if you're getting 4% a year over the course of 10 years, you're going to make 40% in your money risk-free. Why would you risk or take risk in markets like that? If you have a lot of money, it doesn't make sense to risk that in the markets. When you're going to get this risk-free return for 10 years, that's pretty nice. I mean, for every $1 million at 4%, you're going to make $40,000 a year. If you have $10 million, you can make $400,000 a year and face no risk. I mean, put it like that, that doesn't sound too bad. If you had $10 million at 2%, then you're only going to make $200,000 a year risk-free, and that doesn't sound nearly as good. That's what prompts more risk-taking behavior when rates do start to fall. Now, also with inflation, if we're expecting inflation is 3% a year, just let's use that, 3% a year over the next 10 years, that's, let's say 10 years from now, your earnings will have to at least be discounted 30%, right? Higher inflation, the more you got to discount future earnings, even compared to 2% inflation or 1.5% inflation. That is a massive difference in valuations you're going to assign to companies today. So specifically for those reasons, valuations will be even more supported in a soft landing environment with the Fed lowering rates, and that's really going to help out Tesla stock. And again, part of this enthusiasm that you're going to see in markets following this Friday's jobs report, which in my opinion, you're probably going to see a report that's right along the lines of what we're expecting. That's around 165,000 job ads. That's the unemployment rate that falls 0.1% down to 4.2% from 4.3% right now. Again, part of the reason markets are going to be so excited by this is because there's already so many influential people in the investment community calling for a soft landing, including Evercore's founder, Roger Altman. This says a soft landing is playing out vividly right now, which again, we're not going to know if we're in a soft landing until the federal funds rate is between 3 and 3.5%. That's going to be until 2026, right? There's a lot of time here. So even though I'm calling for a good September, and I think Tesla is going to have a huge rally, and there's a lot of potential in the near term for Tesla, we're not safe for a long time. We won't know, what's going to happen in the economy for a long time. And I do think there will be a moment of panic at some point down the line, whether it's a month from now, 3 months from now, 6 months from now. At some point, there will be increased recession fears. But individuals like this will help Tesla have a good September. So take a listen to this clip, and then we'll break down a little bit more of the valuation prospects behind Tesla stock that really supports Tesla hitting $300 per share as long as this Friday's jobs report comes in good. And I expect it's probably going to.
Focus on going forward. And what do you see as the one or two things that are the most important to Roger Altman over the next couple of months?
Well, I don't know how you could have overall a more favorable macroeconomic environment, given where we were 3 years ago, than the one we're seeing, including captured in this morning's economic data. Look at what we saw. The economy the growth rather is resilient. Looks like real consumer spending is going to be up about 4% for the quarter just ending tomorrow. That is remarkable. Personal income was a touch softer than expected, but still okay. It looks like the next monthly jobs number, you just mentioned that, probably going to be around 200,000 positive. Overall, a very resilient, solid picture. On the other hand, inflation is progressing in the direction everyone wants it to. You saw this morning that core PCE and PCE both running around 2.5%, getting closer and closer to the Fed's long-term 2% target. So you have the soft landing playing out quite vividly, Brian, right in front of us.
Yeah. I do wonder, though, I know, listen, again, we always talk about the jobs number. I get it. It's a big deal. But then when they revise it down 818,000, you kind of wonder, why are we paying so much attention to the jobs number, Roger, when they keep revising it down or up? However they revise it, they change it. But that said, I hosted Squawk this morning, and we had former Fed official Jim Bullard on. I don't know if you caught it. And I kind of dove in with him, and I asked him, all this debate about inflation, people blaming price gouging, whatever, how much the 2021 spending package and PPP loan money impacted inflation. Here was his answer. Listen and respond.
March, April 2020 response to the pandemic was big, and it was meant to be big, and I think it avoided a financial crisis. But then you got another package passed by Congress at the end of 2020 in December, bipartisan, very large. That was because of the Georgia election. And then again, when the Democrats came into power, as probably any party coming into power, they wanted to do something, so they passed another package. It's those two last packages that were overdone. And that's what led right after that. We got a whole bunch of inflation, and we're still keeping the policy rate, very low in that environment. And then we had to scramble in 2022 in order to bring this under control.
Roger, do you agree?
Well, not entirely as follows. I think he's right that the total of the three stimulus packages that were passed legislatively in response to COVID, in retrospect, were too big, especially the last one, which he mentioned, the American Rescue Plan. But were they the main cause of the inflation surge we saw, Brian, in the midst and coming out of COVID? The answer to me is no. The pandemic and all the supply chain impacts and others is the primary cause of that inflation. Did an overly large federal response contribute to that? Yes, but it wasn't the main cause.
Yeah, but when you sprinkle all that money from the sky, right, whether it's stimulus, whether it's PPP, or whether it's indirectly ultra low rates that just basically drive people to borrow money, combined with all those pandemic level shortages, that would seem, I would imagine that was at least gasoline on the inflationary fire.
Yes, it did contribute, but it wasn't the main event. When you step back and remember, Americans were stuck at home. They were receiving checks from the government. They were actually quite liquid. They couldn't spend on a series of categories they typically did, like going out for a meal or travel, and they spent, therefore, on items they could spend on, and initially that was durable goods, a new bike, a new grill, home renovation, and so forth. The demand for those durable goods skyrocketed. Supply chains, which were disrupted already by COVID, couldn't keep up. There was a surge of inflation in durable goods, and then when the economy began to reopen and people could start to enjoy certain services they'd been blocked from, then that bled over into services inflation. But it was all those disruptive effects of COVID that were the main cause of this inflation, which we're now coming out of happily, at least in my view, Brian.
I just want to know who the fuck was howling in the background. In all seriousness, I love a good hoot. He probably made a lot of money, and yeah, we're heading into an extended weekend in which I hope you guys enjoy your Monday where markets are closed. But again, as I mentioned before that clip, from a valuation perspective, we're expecting full year 2024 EPS at $3.22. That really doesn't matter. If you look at 2025 EPS, that's what matters. And right now, the estimates are $4.43 on aggregate. If you times that by an 80 times multiple or so, you're looking at Tesla stock at about $354 per share, which that makes sense to me by, even the start of 2025, since markets price in things on a forward-looking basis. But even if you want to go with something that's just slight marginal improvement from here, well, I guess not marginal improvement because Tesla's trading at, let's see, $214 per share divided by, $3.22. Tesla's trading at about a 66.45 times multiple, times that by $4.43. If we just trade at the same exact multiple that we're trading at to start 2025, since markets price things in ahead of time, you could justifiably say Tesla stock could be $294 per share by the end of this year. I think that could get sped up with a little bit of hype or euphoria around the Robotaxi event on October 10th, the possibility of the unknown, what could be said at that event, what value could be created from that event, and the Fed ultimately cutting rates for the first time in many years. So I think from a pure valuation basis, there's not much holding Tesla back at this point. And I think Tesla's actually pricing in a decent amount of risk at $214 per share if we look at 2025 estimates. And as we head into September, like we're getting close to starting 2025, markets are paying attention to 2025. Tesla, rightfully so, should probably be trading higher than where it is at $214 per share. And I think that's how you can justifiably say Tesla could be a $300 stock by the end of October, which is not far from now. So let me know what you think about this information down below in the comment section. I will say it's not just going to be Tesla that rallies. I think Tesla can have an explosive rally if this Friday's data is good. But it's also going to be value. It's going to be cyclicals. It's going to be industrials. It's going to be dividend payers, small caps, right? They're all going to rally much more than big tech for obvious reasons. Recession risks presumably falling. The Fed funds rate presumably falling September 18th. So many different reasons I cover all the time. I really don't think I need to elaborate on that too much. We should all be familiar why big tech has outperformed in the last 2 years and why the Fed lowering rates and higher perceived odds of a soft landing will be negative for big tech and positive for the rest of the markets. It's pretty straightforward. It's pretty simple. But I just think Tesla has a very attractive upside potential with the Robotaxi event on October 10th and Tesla's next upcoming earnings roughly around October 16th. Could be, the 20th, 21st, 22nd, 23rd. I think there's a good reason to own Tesla stock right now. But I do think Tuesday, Wednesday, and Thursday of this week could be pretty red days. I think there's a reason for Wall Street to take off some risk heading into the jobs report. And that's preferably what we want to see. We preferably want to see a balanced approach to the jobs report on Friday, because this is the biggest catalyst of September. This will make or break the seasonality of September. Whether or not September's a good or bad month comes down to this Friday's jobs report. It would make sense, and I would question the market's sanity, if you will, if we did not sell off either Tuesday, Wednesday, or Thursday before the jobs report. Because with such a big catalyst like that, that's typically an event you want to take risk off the table for, not add risk into such a big catalyst. So I think the week itself could actually be a bad week, but Friday is going to be a really good day. And then next week, like not this week, but the following week, the week of September 9th, 10th, 11th, 12th, 13th is going to be a really good one. But that's just my personal opinion. Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a fantastic rest of your day. Oh, by the way, if you want to come trade with us live in real time, check out that link down below in the description of this video. Enjoy your Mondays and your Labor Days and get ready for winter. It's coming. I mean, it's hard to say that since I live in Michigan. It's been in the 80s, 90s for some days for a couple of weeks now. Winter is coming. Not for Tesla stock, but for the weather conditions. Winter, it's not coming for Tesla. In my opinion, not in September. You guys have a great day, and I will see you in the next one.